Hey guys, welcome back to another episode of US Stock Market Technical Analysis. In this video, I'll be sharing with you my September 2021 technical analysis of the S&P 500, the Dow Jones and the Nasdaq. And as always, we'll begin with the S&P 500 first. So right now we're on the S&P 500 chart on the daily time frame. From a bigger picture, while we might not necessarily be at the later stages of a bull market, we're definitely not in the early stages. Because if we zoom out over here, right, we see all the way back in 2020, where the market bottomed at the height of the pandemic over here. After that, the market has rebounded strongly ever since, minus a few hiccups along the way, such as over here and over here. But we see over here, since the start of 2021, the S&P 500 has been trending very nicely upwards. Every time the S&P 500 declines, it declines to the 50-day moving average as indicated by this green line over here, and it will find support at the 50-day moving average and bounce back up. And this has happened quite a number of times, right? So this is the first time, second time, third time, fourth time, fifth time, sixth time, seventh time, eighth time. Right, so if you just take a look at this price chart for the S&P 500, every time the S&P 500 declines, it declines back into the 50-day moving average and it finds supports at the 50-day moving average and then it rebounds from there. So right now, there's a buy the dip mentality in the stock market, especially with regards to the S&P 500. On top of the fact that the S&P 500 has been finding support very reliably at the 50-day moving average, the S&P 500 has also been moving in a very predictable manner. Let's say we take the peak of prices just before prices decline back to the 50-day moving average. So for example, in this case over here, the peak is around over here. And we take the peak over here to where prices decline back into at the 50-day moving average. For this example, we see prices declining by about 4%. And if we take a look at another example, over here, this was the peak, and then prices declined to the 50-day moving average over here. And over here, prices declined by about 5%. And we take a look at another example, let's say for over here, this was the peak just before prices declined, and then once prices declined, it found support at the 50-day moving average. And we can see that this decline was about 3.45%. And if we take a look at just one more example, over here, this was the peak, and then prices decline over here. We see that prices decline about 3%. So what I'm trying to say over here is that every time prices move about 3 to 5% away from the 50-day moving average, prices tend to decline back to the 50-day moving average after that. And as you have seen from the examples, the S&P 500 has moved in this manner very predictably. Too predictable to the point that it's almost eerie. And while past results does not indicate future performance, we still can use these previous examples to give us a better idea of what is likely to happen moving forward. So if we zoom in over here, right now as of the filming of this video, we are at this candlestick over here. And we are about 3% away from the 50-day moving average. And we are in the historical range where prices can decline from there. So that is just something to pay attention to over here. And to add on, right now we are on the wave up. Right, so when price move in an uptrend, it does not move up in a straight line. It tends to follow a wave-like motion. So for example, over here, this is the wave up, this is the wave down, wave up, wave down, wave up. So right now we're on the wave up. And whenever prices are on a wave up and prices are a bit overextended from the 50-day moving average, there's a likelihood that prices will decline. And this decline comes in the form of the wave down. So while prices right now are about 3% away from the 50-day moving average, it's still at the lower end of the range. Because as we have seen just now, the distance between the S&P 500 and the 50-day moving average tends to be about 3 to 5% before prices of the S&P 500 decline back to the 50-day moving average. So while we are definitely still in the historical range, we are not at the upper end of the range. And right now we can see over at this price level of around $453, there's a bit of resistance for prices, right? If you see at this level over here, prices for the S&P 500 hasn't been able to break above this price level in the past 4 or 5 trading sessions. So that's the first resistance for prices to overcome before moving upwards. If prices do decline, then the first support that I'll be taking a look at for prices is at this price level of around $446. If prices do decline to this level over here at the 446 price level, ideally I would like to see the 50-day moving average also catch up to this price level over here. Because then we'll have these two confluence factors coming together to provide support for the S&P 500. And at that point, if you're looking to buy the S&P 500, it could be a good entry position. That's my technical analysis for the S&P 500. Now let's take a look at the Dow Jones. For the Dow Jones, prices hasn't been as smooth sailing as the S&P 500. Because if you take a look over here, even though for the Dow Jones, prices have generally respected the 50-day moving average, prices did undercut the 50-day moving average over here and over here. While prices did not remain below the 50-day moving average for long, prices still did close below the 50-day moving average nonetheless. And another difference between the Dow Jones and the S&P 500 is that for the Dow Jones, every time prices decline, it takes quite a while for prices to recover. So if you take a look over here, prices decline on 1, 2, 3 days. But it took prices almost 2 to 3 weeks just to get back to this previous level over here. Similarly over here, even though prices did decline for an extended period of time, it also took prices quite a while just to get back to its previous high over here. And we're also seeing this happening right now. Over here, after prices decline back to the 50-day moving average, we can see that prices are laboring just to get back to the previous high over here. So this highlights to me the sluggish nature of the Dow Jones right now. So that's just something to pay attention to the Dow Jones. As for the key price levels that I'll be taking a look for the Dow Jones moving forward, the first one is this price level of around $356. And this is the previous high level that prices managed to make before it declined over here. If prices continue to remain sluggish and not be able to break above the price level of around $356, then the support level that I'll be taking a look at for the Dow Jones if it does decline is this price level of around $349 and this price level of around $348. The price level of $349 corresponds to the 50-day moving average, and the price level of around $348 corresponds to this key price level over here. So as you can see on the left side of the chart, this has been proven to be a resistance level, resistance level, resistance level, and then once prices break above the resistance level, it found support at the previous resistance. So it has now become a new support level. And we can see over here, prices also finding support at this new support level. So these are the key price areas that I'm taking a look at for the Dow Jones moving forward for the month of September. Now let's take a look at the Nasdaq. Now, if you take a look at the price chart for the Nasdaq and compare it against the Dow Jones, you'll notice that there will be a difference. So just now, I talked about how every time the Dow Jones decline, it takes a very long time for the Dow Jones to labor its way back up to its previous highs. But for the Nasdaq, ever since it broke above this base over here, you'll notice that every time prices decline, prices recover and make a new high very quickly. So over here, we had 1, 2, 3, and 4. 4 days of decline, and you'll see that in the next subsequent 4 days, prices not only managed to recover all of the losses, it managed to also make a new highs in the process. Then you'll see over here, prices trade sideways for a while, and then it declined, right? So it declined on 1, 2, 3 days. And then all it took the Nasdaq was 2 trading sessions to recover the losses and make new highs. So that's what we want to see in a healthy uptrend. When prices decline, prices recover very quickly and make new highs. And if we take a look right now over here, currently prices are a bit overextended from the 50-day moving average. So if we take our 2 over here, from the top over here to the 50-day moving average, prices is about 4.27% away from the 50-day moving average. This is not to say that prices can't continue to rise. It can continue to rise. In fact, if we take a look over here, prices remain overextended for a period of time. And then the only time that prices moved close to the 50-day moving average was over here, about 2 months later. So right now, even though prices might be a bit overextended from the 50-day moving average, it can continue to remain overextended from the 50-day moving average for a period of time. But for me personally, if I'm going to buy the Nasdaq, I wouldn't buy the Nasdaq right now. Even though, like I mentioned earlier on, that the Nasdaq can continue to rise up even though it's a bit overextended from the 50-day moving average right now, I'd rather be a bit more patient and wait for the Nasdaq to come back closer to the 50-day moving average before adding any position into the Nasdaq. So if you're like me and waiting for a pullback, then there are some areas that I'm taking a look at. So the first support that I'm taking a look at is over here, and then the second one is over here, and then the third one is over here. I wouldn't necessarily want to enter my position in the Nasdaq over here, unless the 50-day moving average is able to catch up to this point over here. A more likely point would be this support over here, because this support is closer to the 50-day moving average. So moving forward, the 50-day moving average might catch up to this level, and then if prices decline, then we'll have 2 support at this level over here. So the first support will be this key price level of around 369. The second support will come in the form of the 50-day moving average if it managed to move up to this price level over here. So that's my technical analysis of the US stock market. Hopefully you have enjoyed and learned something from this video. If you did, smash that like button because it will really help the channel grow and allow me to produce more content such as this. And if you are new to this channel and haven't already subscribed, make sure you subscribe to my channel because each week I release 2 new videos about investing, trading and the stock market. I'll see you in those other videos. To your financial success.